Good morning, everyone. It's JJ from microefutures.com. Quickly want to show you how to look at a market when it closes and the dynamics of what happens when a market closes and how it can affect the next session, in this case, the overnight session. So yesterday we had a bit of a crazy day. Got way up here over the 40-15 area, came slamming all the way back down at the end of the day, and we actually closed the gap. But it took all day to close the gap. So we closed the gap at the end of the day. And then what happens is M period is when all that day trade margin, because we borrow money from the brokerage firms to trade, we've got to return it by the end of the day. So that usually liquidates on a day like yesterday. And a lot of people will follow price and get trapped down here in the previous day's range. Then you'll notice the market moves higher. And this is why I always look at that hour after the 4 o'clock close Eastern time, because N period and O period, when they close higher than the liquidating M, right, that means that the liquidating inventory, this is all inventory, trapped longs, they can't hold overnight, so they puke out. And when they get rid of that, that all just sells off into wholesale market maker and large traders who act as market makers' hands. Then what happens is in the overnight, that inventory is taken and sold at higher prices, right, until they run out of buyers, and then they sell the market all the way back down to their cost basis. So their cost basis is right around here. Now in market profile, they'll call that the point of control, right? That's the volume point of control where 70% of the volume in the value area trades. But I call that the cost basis because that's what I consider the large wholesalers, that's what they paid for their goods, right? And the market will sell down right to their cost basis. It'll take the end low by one tick, create that double bottom. The shorts who shorted down here the previous night have bids in, and that's where the shorts come in and buy up the supply, and you get that quick move back up. Okay, and here you'll see it here. This is a larger market profile chart. You can also see this on candles. I'm just doing this to show folks how market profile shows it very, very clearly once you know what to look for, right? The problem with a lot of market profile is that, it's very sort of highfalutin in the way people present it. And they, what's the actionable information? What can I use to actually make money trading? Well, you need to know where the buying is and where the selling is. See, that W period couldn't take the stops in K. We ran out of buying. So this is where if you were a short seller, you would be initiating a short position. This is where you would be covering because this is where you would expect buying, right? So as retail traders, we can't move the car. We need to get in the car and wait for somebody to push it, right? So you need to know where the selling is and where the buying is so you can transact in between that. So we're always looking for the bid. The bid's here, right? The bid's coming from short sellers because it's 2 in the morning in New York. Nobody's buying this to put a position together at 2 a.m. So this is short selling. The short sellers that are buying back, this buying is temporary. So if you do take trades off that double bottom, you know you're looking for the next upper stops. And if it can't get there, get out of your trade, right? If you're learning how to trade and you're a small trader, right? You need to learn how to take quick profits so you can build up your confidence, learn order flow, and just learn how to do business in a responsible and intelligent manner. Use a little common sense. We teach you how to do all of this. We teach people how to be profitable, right, and consistent, and keep their risk low at microefutures.com. If you have any questions, DM me. Please come visit us. I'm JJ. Have a wonderful morning. Bye for now.